$5.2 billion for Brex. Capital One is finally admitting traditional banking is dead.
Nate, they bought a fintech unicorn at a premium just to get a decent app interface. That is not a strategy. That is a midlife crisis.
Oh, come on. With Santander dropping $12.2 billion on Webster, massive banking consolidation is clearly back.
Only because the regulators are distracted by the $47 billion big pharma just quietly dropped in Q1.
Now that is a frenzy I want to talk about. The rundown.
$47 billion in one quarter. That's just an absurd amount of capital to deploy, even for big pharma. Merck, Eli Lilly, Biogen. They're basically treating biotech startups like a tasting menu right now.
You've got to eat or be eaten when patents expire, Maya. I love it. It's pure strategic necessity. We're finally seeing M&A rebound this year, and it's not just because money is cheap again. They need the pipelines.
I need to see the actual clinical data on half these targets before I call it strategic. But speaking of tasting menus, Danone just bought Huel for $1 billion.
$1 billion for the Tech Bro meal replacement sludge. Incredible.
Hey, don't mock the sludge. The margins on powdered protein are fantastic. Danone desperately needs to bulk up its consumer goods portfolio, and $1 billion is honestly a rounding error for them.
Fair. But if you want a real rounding error, Google officially closed the Wiz acquisition. $32 billion for cloud security.
Which is still staggering to say out loud. $32 billion. And speaking of tech giants writing weird checks, look at OpenAI. They just bought TBPN.
Wait, really? The streaming business? OpenAI bought a streaming platform?
Exactly. Which makes zero sense until you read between the lines. They just need infinite video data to train their models. They aren't buying an entertainment company, Nate. They're buying a data farm.
That's actually smart. See, that's the AI integration narrative playing out in real time, though I'll say not every sector is having a great year. The whispers I'm hearing from the packaging guys are pretty grim.
Let me guess. Supply chain panic?
Total deep freeze. This escalating Iran conflict is spooking the boardrooms. Buyers are getting cold feet on anything that relies on global shipping routes. Deals are just dead in the water right now.
Oh, come on. Dead in the water? Or just repriced? Private equity loves a geopolitical crisis. They aren't walking away, Nate. They're just holding out for a 20% discount.
Spoken like a true skeptic. We'll see who blinks first, but you know who isn't asking for a discount? Capital One. Because dropping $5.2 billion on a fintech unicorn is certainly a choice.
Capital One bagging Brex. We need to talk about this massive banking consolidation wave, because between this and Santander, the old guard is finally waking up. The big one. $5.2 billion. I had to refresh the SEC filing 3 times because I thought my monitor was dropping a decimal point.
You are looking at this like a traditional bank merger. Stop looking at the balance sheet for 2 seconds.
I am physically incapable of ignoring the balance sheet, Nate. They just paid $5.2 billion for an expense management dashboard.
It is not just a dashboard. It is the entire operating system for the next generation of startups. Capital One is buying a time machine. They get the corporate customers before they are big enough to need a real treasury department.
A time machine that burns cash. Brex has been pivoting harder than a startup in 2001. First they're for startups, then enterprise, then back to startups.
Okay, yes, the pivot whiplash was real. But look at the macro picture. The regulatory environment is actually letting massive banking consolidations happen again. Look at Santander.
Right? Santander buying Webster Financial for $12.2 billion. But that makes sense. Santander bought actual deposits, real commercial loans, a tangible footprint. Capital One paid nearly half that amount for a company whose main asset is a really slick user interface and a mountain of customer acquisition costs.
You are being deliberately reductive. Capital One knows that if they don't own the software layer where founders manage their money, they become a dumb pipe. Nobody wants to be the plumbing. It is a classic build versus buy. Their internal engineering team would take 10 years to build what Brex already has.
I don't disagree on the tech. Brex has a beautiful product. But let's talk about who actually wins here. The real winners are the late-stage VCs who were quietly hyperventilating about how they were ever going to exit this thing. Capital One just handed them a massive golden parachute.
I can literally hear the champagne popping on Sand Hill Road from my house, but tell me I am wrong about the integration. If they staple Brex's software to Capital One's balance sheet, that is a monster corporate card offering. Amex is definitely having an emergency board meeting right now.
Amex is probably laughing at the multiple, 5.2 billion. I will believe the synergy when I see it in the earnings report in 18 months. Until then, it is just a very expensive press release to distract from their consumer default rates creeping up.
Spoken like a true journalist, I am calling it right now. This goes down as the smartest fintech acquisition of the decade.
We are recording that prediction. I will play it back for you when they take the impairment charge.
Fair enough. But banking isn't the only sector throwing billions around this week.
Not even close. If you think 5 billion is wild, wait until we look at the $47 billion the big pharma companies just spent in the last 90 days. Voices. Week 1 of
I'm looking at this note from the analysts, and they're pushing this narrative that the 2026 M&A rebound is entirely about strategic necessity and AI integration. They're saying the days of cheap liquidity driving deals are over.
Oh, please. That's such a convenient narrative. Slap AI on the rationale and suddenly paying a massive premium is a strategic necessity.
You don't think the OpenAI deal for TBPN proves their point? That's literally an AI company buying a streaming business.
That's one deal, Nate. Look at the actual volume. We just saw $47 billion drop in pharma in Q1 alone. Merck, Eli Lilly, Biogen. They aren't buying AI startups. They're buying pipelines because their patents are expiring. That's just classic panic buying, not some visionary tech integration.
Fair, but the banking consolidation thesis is holding up. Industry watchers are saying the regulatory environment is finally thawing. That's why we're seeing Santander drop $12.2 billion on Webster Financial and Capital One grabbing Brex.
The regulatory thaw is real, I'll give you that. But I'm hearing something totally different from the advisory side right now. Boardrooms are actually terrified.
Because of the Iran situation?
Exactly. The geopolitical risk is spiking. I had a guy tell me yesterday that anything touching global supply chains is basically toxic right now. The whole packaging sector pipeline? Completely frozen. Buyers are getting massive cold feet.
Which is wild because packaging used to be the safest, most boring private equity play on earth. You buy a cardboard box maker, lever it up, and go play golf. Now you have to worry about the Strait of Hormuz.
The footnotes on those risk disclosures are getting very, very long.
Speaking of disclosures, we have some massive filings hitting the SEC database tomorrow morning.
Are you talking about Gilead dropping $2.2 billion on oral medicines?
That and Creative Planning swallowing Maseko in London. Another $5 billion in AUM just crossing the Atlantic. Spill the tea. So OpenAI buying TBPN, a streaming business. Tell me you saw that coming.
Literally no one saw that coming. I read the press release 3 times looking for the typo. Why does an AI company need a streaming platform?
It's a massive data play. You feed the video directly into Sora. The analysts are right on this one. M&A is rebounding in 2026 entirely on AI integration and strategic necessity. It's not just about cheap liquidity anymore.
I buy the data argument, but the timing is still wild. The boardrooms I'm talking to are completely spooked right now. Have you looked at the industrial sector this week?
You mean the great packaging freeze?
Exactly. The geopolitical risk with the escalating Iran tensions is shutting down supply chain deals entirely. I talked to a distressed debt guy yesterday who said the packaging M&A pipeline is basically dead for the rest of the year. Buyers have absolute cold feet.
Oh, come on. Packaging is dead because it's boring. Nobody wants to finance a cardboard box merger when you could be financing software.
That's the most stereotypical ex-banker take I've ever heard. Packaging is the backbone of global trade, Nate. If those buyers are freezing, it means the smart money is modeling massive supply chain disruption.
I'm just saying the capital is still flowing where the regulations are loosening. Look at the financials. Improved financing conditions are accelerating massive banking consolidations.
Right, the Santander deal for Webster Financial, 12.2 billion.
Exactly. And Google just officially closed that $32 billion whiz deal. Big tech is definitely still writing checks.
If the asset is right, yes. Speaking of writing checks, tomorrow we need to watch the regulatory dockets for creative planning.
Ah, yes, the pending Maseko acquisition.
Right, that adds over 5 billion in AUM once it clears. We're also waiting on the SEC filings for Gilead's $2.2 billion buyout of Oro Medicines.
Which is just a drop in the bucket compared to the massive $47 billion pharma frenzy we saw in Q1. Let's get into those numbers. Tomorrow's radar.
I'm hitting refresh on the SEC portal tomorrow morning, waiting for the Gilead and Oro Medicines filing. $2.2 billion for a preclinical pipeline. I need to see the milestone structures.
Oh, come on, it's Gilead. They have cash, they need growth. But fine, go read the footnotes. I'm actually watching the regulatory docket for creative planning scooping up Maseko.
The London Wealth Manager, that adds what, 5 billion in AUM?
Over 5 billion. But the real story tomorrow is the boardroom panic over the Iran situation.
Yes, the supply chain paranoia is real. I heard the entire packaging sector M&A pipeline is basically frozen. Buyers are terrified.
Packaging? Really? Out of all the sectors, cardboard is what breaks the M&A wave?
Don't underestimate cardboard, Nate. You can't ship AI chips in a digital box.
Fair point. Speaking of digital boxes, we still need to unpack that OpenAI streaming deal.
We do. We'll tear into TBPN tomorrow morning.